The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grandy.
And I want to welcome one of my best friends, Craig Roberts. He has a wonderful show on KFAX 1100, Lifeline. He's been doing that show for years. We've been friends for years. And every time at this time of year during the holidays, we look forward to getting together and kind of go over what is going on in our country and our business, and it's a lot of fun to do. And Craig, again, boy, the year's going by again. It seems like you were here 5 minutes ago.
It seems like it, and, I think 5 minutes ago I was still out from underneath the desk. Now I'm hiding deep underneath it. It has been certainly a wild year and wrapping up a wild quarter going into, I guess, some degree of uncertainty as we approach 2019.
Everyone talks about the tariffs. And since we now have been since October, we've been in a narrow trading range of just 7% of consolidation on the S&P, and there's no catalyst to move it out. And it appears to me, yes, I agree that tariffs are contributing to this, contributing to where the market has stalled. We're not making new yearly highs every week. But I believe that it's more than the tariffs. If you really start taking a look at the damage, since 2008, the stock market, the S&P, has gone up 300%. But so has our debt. Our debt's gone up 63%. Our corporate debt's gone up 83%. They've been able to get away with it because of the zero interest rates. Now, I think we saw just what happened when they raised rates just a little bit, 7 times since 2015. Didn't end very well for them. So I think this is a lot more than the tariffs. What do you think?
Well, Phil, you've been trading for years and years, and certainly if anybody knows how to watch trends, you're the guy that does. And I think it is indeed very oversimplistic to suggest that simply the talk about tariffs is what's causing this market to drag down the way it is. I mean, it's a mixed bag. At one level, we look at it and say, Mr. Trump has a point. When I sell to you, you charge me 25%, but when you sell to me, I charge you 2%. What's wrong with this picture? And, there have been some severe mistakes made down through the years with these trade negotiations. I think part of the challenge is trying to correct 25, 35, 45 years worth of these lousy trade deals and do it overnight. I think that's a bit of a strain on the markets, to be sure. The president is absolutely right. We do need to deal with this trade imbalance. But having said that, there are so many other factors. I'm reminded, Phil, and every married guy out there can certainly relate to this, when you were dating your spouse and you hadn't yet made the decision or tied the knot, she would say to you, well, come on, honey, you got to commit. You got to decide what you're going to do here. For women, that sense of stability is very important in a relationship. And so in that regards, Wall Street's a lot like a woman. It doesn't like uncertainty. It doesn't like operating in this big vacuum where we're unsure of what's going to happen. And I think we've added to this the slow rise in the prime interest rate, concerns about what's going on with the health of the economy of Europe, particularly with the pressure of Brexit. Will it happen? Won't it happen? And if it does, when is it going to happen? What's going to happen when it does happen? The tariffs talk. And then, we've seen some big boost to the arm of the economy during the Trump administration, both between, number one, deregulation and getting into a lot of the crippling regulations that was just stifling business so bad. Certainly the boost to the bottom line of every corporation with the drop in the corporate tax rate has helped enormously. But these tend to be benefits to the markets that are short-term, and then over the longer term, the markets go back to, do things look stable? Is there certainty in the future, or are there questions? The markets don't like uncertainty, and I think a lot of these questions, some of which are controllable, meaning the president's tweets, things of that sort, and others that are absolutely out of everybody's control, I think has had a large impact on a lot of the instability that we've seen the markets responding to, and as a result, this decline from absolutely stellar numbers at the beginning of the year to where we're at now, which appears to be moving towards bear territory.
I predicted on January 16th of this year that I said, I want everybody to write down that Phil Grandy said January 16th, this is the first day of the stock market crash. I said the capitulation will probably happen in December of this year or the first or second quarter of next year. And what I based that on was if you really take a look at these earnings, yes, the earnings are up 20%. Yes, they're terrific. But when you go back and you look into these earnings, 10% or more of those earnings comes from the tax cuts, comes from the stock buybacks. And now I think that when you're starting to raise interest rates, a lot of these stock buybacks are going to start drying up. And the stock buybacks have really hurt these corporations because the only one who benefits is really the CEOs and the large shareholders. The employees certainly don't benefit. And because all these years now, 10 years, the employees still really, they say, oh, they're getting a wage hike, but of course inflation eats their wage hike. And they're really not adjusted for inflation. Their wages aren't any more than they were, 20 years ago, but their debt's 35% more. I think the big problem we're facing right now is, as we all know, consumption is what grows this economy. But the only way they've been able to consume is easy car loans, 5 credit cards, easy student loans. I think we're going to see a big turn now. I think we're going to see that with the stock buybacks, I think less of them as interest rates go up. I think there's going to be a decision made by Trump and his boys, Kudlow and the rest of them. Do we do another quantitative easing? Or do we say December, no more interest rate hikes, and that means for next year? And are they going to try to shoot this market back up again, just like they've been doing for the last 10 years with low rates, easy money, easy credit? If they do that, they try to do that, they're going to really implode this economy from within, destroy it. Because you just can't keep having earnings going up based on tax cuts and so forth. I hope he will do what George Bush didn't do. When the banks were ready to collapse, George Bush said, let the capitalism work and let the banks collapse, let the 8,000 other banks pick up the pieces. And I hope Trump doesn't use his ego and let this economy correct. Let it correct 20, 30, 40%. That's what we need. Think about it. We haven't had a real pure correction in how long? And you got to correct these imbalances, don't you think? At some point, we just can't be on this sugar high.
Well, we've called it the new normal, but the problem is there's nothing normal about this at all. And, our recollections can go back to March or April of 2009 when the Dow was at its low point, the 6,000 and change. And my goodness, even as we bemoan the losses here over the last quarter, we can certainly look at it and say it's 4 times what it was 10 years ago. And yet it's gotten there because we've borrowed and borrowed and borrowed, and we've made the lending rules so loose, so easy. And, of course, the one big thing that's kind of lurking here in the background, the monster in the closet, so to speak, and you alluded to one aspect, and that is the corporate debt. There's a bomb there that's waiting to go off, over $9 trillion, and I think you're right, Phil. You can only ease so much by reducing the income tax rates to the corporations before the benefit of that kind of disappears. But the other big issue that's looming in the background that, ironically, nobody seems to be talking about. This is not a talking point for Democrats or Republicans or independents. It seems to have just kind of disappeared into the background, and that is the $21 trillion debt.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grandy, philsgang.com. We have 3 wonderful programs. We have a program for a person who just doesn't have time, the very, very busy person, where you follow my 5 recommendations. The same 5 stocks I've been investing in for over 2 years. You follow those recommendations. We tell you exactly what to do with those 5 stocks with complete support. So easy to do. We also have another program where you can follow 3 to 4 of the stocks that I actively trade every day. And then finally, if you want to really learn about investing and trading and all aspects of it, we have the best educational program in the country. So we have it all. Join my gang, philsgang.com. 877-600-GANG. That's philsgang.com. See you on the charts.
Don't wait. Make it a prosperous new year with Phil Grandy and the Phil's Gang team. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. philsgang.com has taught thousands of people from all walks of life how to invest and make profits in the stock market. philsgang.com can help you generate extra income, maximize your retirement financial savings, and teach you how to avoid costly investing mistakes. With the Phil's Gang membership, you get all the comprehensive stock research and data, analysis tools, Phil's recommendations, and the professional customer support you need to make smarter, more profitable investing decisions. Don't wait. Call today. 877-600-4264. 877-600-4264. 877-600-4264. Or go to philsgang.com. That's philsgang.com. 877-600-4264. Did you know Phil Grandy hosts a daily live stock market investing webinar class? Never miss a beat with the market and your investments. Learn, invest, and profit with philsgang.com. Call 877-600-4264. That's 877-600-GANG.
Looking for something to stuff your stockings with? How about a Phil's Gang gift certificate? With a Phil's Gang gift certificate, your loved one could learn how to make profits in the stock market. For just $39.95 a month, you can give them financial peace of mind. Now that's a gift that keeps on giving. So go to philsgang.com and click on the store button or call them 877-600-GANG. That's 877-600-4264. And have a Merry Christmas from everyone at Phil's Gang. Ho, ho, ho.
Thousands of investors trust philsgang.com to deliver the tools and resources they need to invest with confidence. With the Phil's Gang MaxVest 1000 stock charts, you have the power to create highest quality, color-coded, easy-to-read charts in just a few simple clicks. Designed specifically for technical analysis and investing, the Phil's Gang MaxVest 1000 stock chart seamlessly integrates and functions on mobile, tablet, desktop, and web devices. Isn't it time you leave behind the old stock research routine, spending hours reading websites, out-of-date newsletters, and magazines? Instead, subscribe to the Phil's Gang MaxVest 1000 stock charts and plan your entire investment strategy. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. 877-600-4264. Sign up at philsgang.com. That's philsgang.com. 877-600-4264. 877-600-4264, and we'll see you on the charts.
St. Jude exceeds any expectation or any dream I could have ever had about a hospital. I was told we wouldn't get a bill. I didn't quite process that. How's this possible? It's possible through all the wonderful people who donate. I don't know if they are aware of what they do, but they're saving children's lives every day.
St. Jude Children's Research Hospital. Finding cures. Saving children. Learn more at stjude.org.
Thousands of investors trust philsgang.com to deliver the tools and resources they need to invest with confidence. With the Phil's Gang MaxVest 1000 stock charts, you have the power to create highest quality, color-coded, easy-to-read charts in just a few simple clicks. Designed specifically for technical analysis and investing, the Phil's Gang MaxVest 1000 stock chart seamlessly integrates and functions on mobile, tablet, desktop, and web devices. Isn't it time you leave behind the old stock research routine, spending hours reading websites, out-of-date newsletters, and magazines? Instead, subscribe to the Phil's Gang MaxVest 1000 stock charts and plan your entire investment strategy. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. 877-600-4264. Sign up at philsgang.com. That's philsgang.com. 877-600-4264. 877-600-4264, and we'll see you on the charts. Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang and our special guest, Craig Roberts. And you brought up a good point about the debt. Not only the $21 trillion debt that's funded, okay, through borrowing and so forth, but the unfunded portion. I mean, you just take Social Security and Medicare. My God, you're talking, what, another $125 trillion. And what's really scary, and should be scary for the retirees, is, Social Security especially, it's not really an insurance benefit. It's not an insurance policy. I mean, we don't really have an agreement with the contract. Yeah, they take our money out called FICA. There's really no contract. I mean, the government could take that away. They could turn around and say, okay, we got to fund this by cutting benefits. I mean, I think this unfunded debt is what's really scary, over $100 trillion. And then again, the Social Security and Medicare, I mean, that's huge. So I think they've taken us on a real wild ride for this last 10 years. A lot of, obviously, the very wealthy, or let's say the 10% of the population, 5% of the population got very wealthy. But, boy, it's got to be pretty scary for a guy who's just on wages, because he hasn't got any way to get ahead. He hasn't got a way to put some money away doing something else. I mean, like a dentist. I always say a dentist has one pair of hands. He can't, too bad. They always complain, I'll put 2-3 chairs in, but I only got one set of hands. I just think that the debt that's unfunded, and where are they going to get the money from?
There is no source for all that money. We, at the end of the day, we're looking at, equal amount of the gross domestic product as to what we owe. So I suppose we can just shut the country down for a year, don't spend any money on anything, and mail your check to the IRS, and we'll see what happens. But you're right. The issue of wage stagnation is a major factor. And then the other issue here, too, that is a major concern for people in states like California, where I'm at, and that is the enormous rate of inflation when it comes to housing.
Oh, my God.
I mean, this is inflation on steroids, and then we've exacerbated the problem that not only do we have hyperinflation when it comes to housing here in California, but added to that, 2 years in a row of devastating wildfires that have destroyed tens of thousands of housing units. The fire up to the north of me here of San Francisco, the Camp Fire, destroyed 12,500 single-family homes alone. And you add to that another 500 apartment buildings. Now, people are still reeling and recovering from the fires of a year ago that destroyed up to 7,000 single-family homes. So let's, for practical purposes, say there's upwards of 20,000 single-family homes that are no longer available. So that's putting further pressure on the rental market, the sales market. About the one thing that you see as a benefit here is that if you want to get a contractor, you look at the cost of inflation and relates to not only construction work, building materials, and you begin to wonder at what point then does this thing just collapse in on itself? And I've often said, if any of the FANG companies, if they wake up to the reality that, gee, with an internet connection, we could move this to Peoria and save an awful lot of money, and find an area where it would be a little bit easier for people to engage in housing, there could be a serious bubble. It could be 2000 all over again.
I'm talking with my best friend, Craig Roberts. He has a show that's been on for most of his life, Lifeline, that's why they call it Lifeline, KFAX 1100, and Craig and I have been together for many years now, and we enjoy doing this every year at this time of the holiday, and I appreciate it. Let's talk a little bit about about what Trump for a moment and what's going on with all this crazy stuff and how it's affecting the market. You talk about uncertainty. And I think a lot of the uncertainty comes from, just watch MSNBC for 1 hour. You'll think they're showing pictures of inside a prison saying this is where Trump is going to be in this. I couldn't believe it. I couldn't believe they're showing pictures of inside a jail saying, well, here's where he's going to be. I think this thing has gotten so out of whack, and they haven't applied the same standards to Hillary and what they did with the FISA court. I mean, it's just so one-sided. I think there's a lot of uncertainty brought to the market because of this stuff, too.
Oh, undoubtedly so. And at the very least, it provides a major distraction, not only for the administration, but, Wall Street looks at this and says, let's back up for a minute. When the elections took place and the decision came in, Donald Trump's going to be president of the United States, immediately you saw a spike in the markets. There had been predictions, they're not going to like him, this, that, and the other thing. Well, just the opposite was true. And we saw a huge response, not only in the weeks following the election, but certainly into 2017. Now, that said, MSNBC and many of the others that love to make hay about this, the allegations of collusion and Russia meddling and so on and so forth, let's face it, to them, Trump is a threat. Hillary Clinton, she's not a threat anymore. My goodness, she and Bill have been going around the country doing some of these rallies, and they can barely get a handful of people to show up. The perceived threat is an ideological one, certainly at many levels in terms of the Trump administration versus media outlets like MSNBC. And so, if it bleeds, it leads. This is what they're going to focus on. But as they do so, I think it creates not only a distraction for the administration, but a sense of uncertainty on Wall Street. Investors look at this and say, well, then what does this mean? Does this mean there could be a change in the occupant of 1600 Pennsylvania Avenue come November of 2 years from now? And if that does transpire, then what does a new president do? Do you get somebody like Bernie Sanders in there that wants to give away free education and elevate socialism to the highest levels? And by the way, if everybody thinks that's a good idea, just watch what's happening in France right now and tell me what you think about the byproduct of socialism. Regarding the Mueller investigation and the fate of the president's former attorney and advisors and so forth and so on. It makes for great television, but it doesn't provide the sense of stability that the markets like to see. And I think that has weighed in heavily on a lot of the volatility we've seen over the last many months as they've sort of ramped up the hyper conversation as it appears that Mueller is beginning to wind down the investigation.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from. All that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Remember, when this market crashed in 2009, it should have never crashed because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG, try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
Hi, this is Kelsey Grammer. When military service members head into battle, none are expected to face the enemy alone, but many return home and become isolated as they struggle with the visible and invisible wounds of war. It can be difficult knowing how to overcome that challenge and rekindle bonds similar to those formed in the military. Wounded Warrior Project supports these injured veterans through their recoveries by connecting them with fellow warriors and their communities. No one should fight this battle alone. Join us at woundedwarriorproject.org.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from. All that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grant at philsgang.com. You know, we raise money every day for St. Jude, and we need your help. And I will reach out to you and help you learn how to invest in stocks. It's a whole new game out there. No more is there investing in stocks based on fundamentals. Those days are gone, totally gone. So look, join my gang, philsgang.com. I'll help you, and then you help St. Jude. Learn how to use a chart.
Sign up today. Simply go to philsgang.com. That's philsgang.com, or give them a call at 877-600-GANG, 877-600-4264. With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
The snow is falling down.
Welcome back to the Phil's Gang Show. Learn, invest, and make profits with philsgang.com, and give us a call, 877-600-4264. Now, here's Phil.
Welcome back to Phil's Gang. I'm talking with my best friend, Craig Roberts. He has a show that's been on for most of his life, Lifeline. That's why they call it Lifeline. KFAX 1100. And what is amazing is the hatred that these people have for the president. Both, I'm talking about people in both parties. It's like they seem like they want a prince or a king. They want, like Obama, for example. He could present himself well. He looked, as they call, presidential, but he was as shallow as the pond out of back of my house. I mean, but you know, they look like they just want somebody that Hey, go up there, speak well, look good, and let us take care of the business of the country. And when Trump came in and he's active and he wants to get in and change things, they hate him for change, don't you think?
Well, I certainly understand the frustration with Trump over many of the pronouncements. I would be the first one to say we're shutting down your Twitter account permanently. But there's an interesting dichotomy here, and that is this, that for as much as there is widespread criticism about the president's lack of decorum or tactfulness, that he's not very presidential, et cetera, I just have to pose this one question. What has changed since he was President Trump versus candidate Trump? The impression that I had was that people were voting for the anti-politician, that people were sick and tired of the smooth-talking politician that didn't get anything done, didn't follow through with any promises, didn't take the running of the country and the best interests of Americans seriously. And so they voted for a guy who never promised to be a silver-tongued, smooth-talking, slick used car salesman. The Trump that you see today is largely the Trump that was out there as the candidate for the presidency. And so I think a lot of it, a lot of the noise out there is misplaced. Now, that said, are there areas where he needs to be tamed? Yes. I think the problem is, for somebody that's used to running the show, I don't think you are going to tame him. I mean, he's about to welcome in at some point here his third chief of staff in 2 years. I think at the end of the day, it demonstrates he's going to run things his way, and we have to either grin and bear it or get with the program.
Craig, what would you say in this year that's passed, the last 12 months here, that you could pick out that you think something that was exceptional or something that was great, and then on the other side something that was not so great, if you had to think back on the year?
Well, I think probably the one thing that has been the major kind of a disappointment, and we're seeing even toward the end of the year here, there's been focus on some of this discussion, and that has been some of the behavior by online companies like Google, like Facebook. We learned from the testimony on Capitol Hill by Mark Zuckerberg that he was far less forthright or forthcoming than he could or should have been in relationship to Russian meddling. There was a hearing called in the European Union, and Zuckerberg the first time showed up and had a, quite frankly, pretty disappointing performance, and the second time the camera kept switching to an empty chair. And toward the end of the year, we've seen the CEO of Google, Sundar Pichai, basically the same thing, making promises with regards to protecting data when, in fact, there's been a history that the company has done a lousy job at protecting data. And if we look back over the last year, on the heels of the Asperian mistakes and what's happened at Target and Sears and some of the other companies that have gotten caught with less than adequate protection for data and the privacy of their customers, that have had access to so much information of its clientele, but quite frankly, of even protecting some of the First Amendment rights of the clientele. I mean, at one level, you see things going on Facebook that would shock the average Navy seaman, and then you turn right around and find out that there seems to be a very clear anti-conservative, anti-Republican bias demonstrated by some of these companies, by some of these Internet companies, has been one of the more disappointing things to come out of 2018. I think one of the upsides for 2018 has been finally bringing the interest rates for corporations in line. We were way out of whack compared to many other first world countries, and I think that hurt America a lot. It certainly saw trillions of dollars in corporate money sitting overseas for not just years, but for decades, money that could have gone to work, that could have had a very positive impact on this country, and made many of the fundamental issues that we talked about today in relationship to the trouble that the economy is facing in terms of indebtedness and so forth, perhaps not be so severe. So I think that's a good thing. Certainly we've seen a bit of a jump in the response of the economy to the tax cuts, and then eventually the effect of that will kind of settle down. But I think the long-term positive effects of it, I think, will be very healthy, and it may be 5, 10, 20 years as all that plays out, much like the current discussions regarding bringing back into line trade and tariffs. This is bitter medicine. It's not fun to talk about trade and tariffs and retaliatory actions by Communist China, who already has a horrible reputation for not only unfair trade practices with the United States, but stealing our intellectual property right and left. And as I said before, Phil, it's a 35, 40-year-long problem. It's not going to be fixed overnight. But the fact that we're finally seeing somebody say we need to address these issues, while the immediate positive impact of the economy might not be something that we see in this presidential term or maybe even in the next presidential term, I think long run it's going to be very, very good for us.
My special guest is Craig Roberts. He has a wonderful show called Lifeline, been on for years, KFAX 1100. We do this every year about this time. We get together and discuss, like we're discussing, what's our opinions of what has happened over the year. I think one of the most disappointing things to me was that when they did the tax cut, I think to tell the folks, especially the working folks, who that they're going to get $4,000 per household, that the companies were going to take some of that money and put it back into capital investment, to increase productivity, increase wages. When that didn't happen, I mean, it hurts, obviously, but it really, I think, has hurt the economy because these folks, a lot of these folks, I mean, they're just working paycheck to paycheck. They're hanging on, and they're just not catching a break. And I thought, to me, that was really disappointing. I
agree with you on that point, and I think that part of the language used by the president to sell this, and I hearken back to a comment that Barack Obama dearly paid the price for. If you like your doctor, you can keep your doctor. We know what an ultimate disaster Obamacare has turned out to be, and I'm disappointed that the Republican Party over the last 2 years that had had a chance to really get in there and fix this mess really hasn't done much. I mean, they've done a little bit of tweaking here and there. They got rid of the mandate, but overall, the inflation rate, the cost of health care, the economic morass that's bogged down with all of the red tape and so forth has not improved one iota. That said, I think part of the whole notion of, hey, you're going to get $4,000 per family, and we're all going to be celebrating with champagne at midnight on New Year's Eve, I think was a bit of a sales pitch. I think that the disconnect came from not recognizing that companies would see this as an opportunity to reward Wall Street. Certainly a lot of the buybacks came because of the tax rate reduction. And, they didn't quite cooperate, they meaning the corporations, as big as I think the president had hoped in terms of giving bonuses or salary increases. That's disappointing, but it's capitalism. What can you do? You certainly can't go to them with a gun to their head and say, do something.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grandy, philsgang.com. We have 3 wonderful programs. We have a program for a person who just doesn't have time, the very, very busy person, where you follow my 5 recommendations, the same 5 stocks I've been investing in for over 2 years. You follow those recommendations. We tell you exactly what to do with those 5 stocks with complete support. So easy to do. We also have another program where you can follow 3 to 4 of the stocks that I actively trade every day. And then finally, if you want to really learn about investing and trading and all aspects of it, we have the best educational program in the country. So we have it all. Join my gang, philsgang.com. 877-600-GANG. That's philsgang.com. See you on the charts.
Don't wait. Make it a prosperous new year with Phil Grandy and the Phil's Gang team. team. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
Remember, when this market crashed in 2009, it should have never crashed because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG. Try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
St. Jude exceeds any expectation or any dream I could have ever had about a hospital. I was told we wouldn't get a bill. I didn't quite process that. How's this possible? It's possible through all the wonderful people who donate. I don't know if they are aware of what they do, but they're saving children's lives every day.
St. Jude Children's Research Hospital. Finding cures. Saving children. Learn more at stjude.org.
Thousands of investors trust philsgang.com to deliver the tools and resources they need to invest with confidence. With the Phil's Gang MaxVest 1000 stock charts, you have the power to create highest quality, color-coded, easy-to-read charts in just a few simple clicks. Designed specifically for technical analysis and investing, the Phil's Gang MaxVest 1000 stock chart seamlessly integrates and functions on mobile, tablet, desktop, and web devices. Isn't it time you leave behind the old stock research routine, spending hours reading websites, out-of-date newsletters, and magazines? Instead, subscribe to the Phil's Gang MaxVest 1000 stock charts and plan your entire investment strategy. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. 877-600-4264. Sign up at philsgang.com. That's philsgang.com. 877-600-4264. 877-600-4264, and we'll see you on the charts. Why pay thousands of dollars for a weekend seminar when for only $39.95 a month? philsgang.com provides all the daily market investing information you need to make profits in the stock market. With over 40 years of investing experience, only Phil Grandy and the philsgang.com team provide daily live investing webinars, up-to-the-minute market updates, all the investing educational videos you can imagine. Don't hesitate to learn, invest, and make profits. Go to philsgang.com or call 877-600-GANG, 877-600-4264. Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com or give us a call at 877-600-4264.
And welcome back to Phil's Gang and our special guest, Craig Roberts.
This is the other interesting thing here, Phil. We're not going to know until we sit down January 1st and can look back on 2018 and start crunching the numbers, sharpen the pencils, really take a look at what the tax cuts mean and what kind of a benefit there's going to be. I've talked to CPAs and tax professionals that have run the gambit of, this is going to be fantastic, to you're not going to see any effect at all, to other people that say a lot of folks are going to pay significantly more in taxes. Certainly Californians, people that live in New York, some of the really high property tax states are a little bit nervous because with the cap at $10,000 per year in interest rates, in an average home in the San Francisco Bay Area, $10,000, you're just getting started. Try $20,000. So I think that it's going to take a while to see whether or not the average John and Mary Smith 1040 looks any better for 2018. I think, if anything, there should have been more done in that arena. I think the tax breaks should have been made permanent so that at least we could have seen the average taxpayer below, say, $200,000 a year really feel as if they've got money to take to the bank here. There was a big failure there. I think the president was counting on more cooperation from Wall Street and the big corporations, and sadly that just didn't come to fruition.
But I think the small businesses, though, I think they're going to really do well, and they should do well.
So small business, you know what, they continue to be, very positive thinking. In fact, the most recent report on small business optimism is very high. In fact, they see 30-year high as business owners continue to work to bring more qualified workers in, and that's good news. Small business employs about half of the nation's private workers, and there's some reports coming out that we've got some all-time highs in small business confidence. I think is very encouraging.
Yeah, I do too. I think anything you do for small business is bravo. I mean, the more you do for small businesses, the more people get to work, the middle class grows. Yeah, I think that's one benefit out of all this. Greg, in closing, let's talk a little bit about going forward here. What do you think is in store for us for, if you could see, Johnny Carson used to use his, I don't have the Johnny Carson hat. You could forecast.
You'd look good in that hat,
though. Beret or whatever they call it.
Well, that was Karnak the Great.
There you go, Karnak the Great. There you go, Karnak the Great. I'm tired. I couldn't get the name, but Karnak the Great. But as Karnak the Greater, what do you think is in store for us?
Well, I think that as we've been suggesting in kind of the analysis to 2018, I think at least moving into the first quarter, we're going to continue to see more market instability. You talked about seeing this downward spiral in January of this year. If memory serves me right, early in 2008, you also predicted that the markets were going to tank. So I think first and foremost, paying attention to what Phil Grandy says is a solid piece of advice. Watching the trends is critically important. It's easy to get caught up in all the frothiness, and much that gets spewed out of the headline news coming from CNBC et al. Tends to be emotionally driven. But we've got to look at a lot of the fundamentals. In certain areas, the fundamentals, as we've been discussing, of the economy are very good. That said, these issues of uncertainty, I think, will continue to plague the markets. It will be interesting to see what the Fed does as we head into the new year. They were very clear in the message going into 2018 that they anticipated 3-4 rate increases. Will they continue along that trajectory next year, or will they say, okay, inflation is enough in check, let's leave well enough alone? I think, if anything, as we've mentioned, the $9 trillion corporate time bomb of indebtedness is a concern. I think the other issue is that we're going to see a shift, and we've already watched this. I mean, it's been a tough year for tech stocks, Apple, Facebook, Google, all hurting. And can we imagine a day and an age when 30 years ago the big names was GM and GE on the Dow 30, and GE is a shadow of its former self, and who knows what the future of GM is. So they're keeping a very close eye on the shift in the stocks, and stock sector rotation is going to be critically important. I think, the idea of the day and age when any dummy could throw a dart at a name and invest and make money on Wall Street is slowly coming to a close and coming back to greater introspection, greater research, watching the trends, taking a look at what's going on in relationship to the charts to really predict where things are headed, and more of the art and science of investing, I think, is going to be a shift. So I think we're going to see a shift away from any old dummy can make money on Wall Street to you really have to have a little bit of a learned insight into where the trends are in order to know how to follow those trends and make sure that you're staying on track for retirement, the nest egg growing, whatever your financial goals happen to be.
Yeah, and I think again the fundamentals. This is a whole different. When we first met, this is a whole different market now. I mean, it's so hard to use fundamentals to invest today because everything is tied to algorithms. Computers. They're Wall Street, the big JC Goldman Sachs. All of them have their computers down on Wall Street and front running.
Well, we saw a couple of weeks ago the 800-point drop in one day, and I looked at that and I thought, I wonder how much of that is people and how much of that is a computer.
Yeah, and most of it. I told my gang the other day, I said, look, while we're in the 7% range, don't do much. Just take your cash, put it aside. If you want to do a few little trades, fine. But this is where people lose their money now. And when you get in these ranges that are tight like this, people force trades. They want to make money rather than laying back in the weeds, hold their cash, and then when we get a breakout, either to the downside or upside, we don't care which, then that's when you start putting your money back to work. And I think most people right now, I would think that they would just lay back in the weeds and wait till we get a good solid breakout. But what really bothers me out of all this, the banks are telling us something. These banks have been weak since 2008. The derivatives that these banks are carrying, these banks have never been solvent. They're still not solvent as long as these derivatives are around. And the bad performance of these financials, the financial sector, is really sending us a message that something is coming. It's not going to be very, very good.
Well, we know that some of the big international players like Deutsche Bank has had serious problems.
Mm-hmm.
And, even some of the warnings coming from big names like Wells Fargo, Bank of America put out a warning for 2019, anticipating a decline next year. And, of course, that was analysis of the overall market. I wonder how much of that really gets even closer to home to analysis of their own stock value.
Exactly. Okay. Well, all right, my friend.
All right, we'll talk soon.
Okay. Have a great Christmas.
Take care.
All right. Bye-bye. People on their auto loans right now and their credit cards and student loans are in default, and that's why the banks are falling. But the big days where they had everybody behind them, they had the Bush family behind them, and they had Paulson behind them because they were saving their own dynasties, those days are gone. Who's going to be there? And here's the big problem. When their banks start going down and collapsing, guess what? They still have near $4 trillion in treasuries on their balance sheet. It's too late. They should have gotten that $4 trillion down to $1 trillion. They should have started doing that in 2010. Now, with the capitulation of the market, and when we finally get that big move down, another 30-40% down, there's no way to stop it because there's no room on the balance sheet. And then what they did, they financially rigged the market by front-loading it with QE, which is, again, printing money and buying treasuries and to lower the rates so the stock market would go up. So please join my gang. And why don't you just try? You can do anything you want in the gang, whatever we do. But why don't you just follow either the 5 stocks that we follow, the same stocks all year. It's called my Working Investor Group. Or why don't you do the video group, where I do mostly about 3 stocks, maybe 4 stocks. Okay, that's it. And I try to stay with just 3 or 4. Sometimes I get ahead and I cut them back, but I like to stay with just 3-4 stocks, and that I invest in and trade in. Besides the 5 stocks that we keep those same 5 stocks all year round. We got 3 great programs. Call now. They're waiting for your call. And when you're doing well, please remember St. Jude. 877-600-GANG. Watch the banks. Don't listen to these people on these financial TV shows.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to